Market sentiment is the overall attitude of traders and investors towards a market or any particular asset. It's the vibe or mood of the market's crowd that can be revealed through the overall activity and price movements. In broader terms, if prices rise, it indicates that overall market sentiment is generally bullish. If prices fall, then it's bearish. In this lesson, you will learn all of the peculiarities of market sentiment. Hey guys, Shad here with the EXMO cryptocurrency exchange. In this lesson, we will focus on market sentiment. Market sentiment is also called investor sentiment, and it's not always based on fundamentals. Day traders can also use market sentiment because it influences technical analysis and their indicators. Technical indicators are good to analyze short-term price movements, but these movements are usually caused by investor attitude towards the said assets. Contrarian investors use market sentiment more often than anyone because they trade in the opposite direction to the trend. For instance, if the market sentiment is bullish, then constrained investors sell assets. Investors divide market sentiment into bearish and bullish. Bearish sentiment means that prices fall and bears control the market. Bullish sentiment means that prices rise and bulls control the market. A lot of investors profit by finding stocks that are undervalued or overvalued based on market sentiment. They use technical and fundamental indicators to determine market sentiment. The process of finding out what the market sentiment and crowd is called sentiment analysis. Well, crazy, I know. There are several market indicators that can be used to determine market sentiment and improve trading performance. For example, the high-low index. This index compares the number of assets making the 52-week highs to the number of assets making the 52-week lows. The index is calculated between the numbers 0 and 100. If the index is below 30, it means that asset prices are trading at their low. If the index is above 70, it means that the asset prices are trading at their high. There's also the bullish percent index. This index indicates the number of assets with bullish prices on the market. Neutral markets usually have a bullish index of around 50. Cryptocurrency markets usually have indexes of over 50 or under 50 due to the dominance of Bitcoin on the market. In other words, if Bitcoin falls on the market, it usually means that other currencies also fall, and the bullish percent index is way under 50 in this case. You can also look to moving averages. This index snapshots average prices during a certain period of time. Investors use the 50-day simple moving average and 200-day moving average to determine market sentiment. Sentiment analysis can't be completed without other types of analysis, namely polarity analysis. This type of analysis ranks textual sentiment in a positive, negative, or neutral way. The polarity analysis takes into account various news feeds of crypto assets and it analyzes their tone. For instance, the phrase, "the price of Bitcoin goes up," will be classified as positive by polarity analysis. There's also, of course, tone analysis. This type of analysis scores the different types of emotions presented in a particular text. The most influential emotions are sadness, happiness, anger, despair, and so on. For instance, the phrase, "do not miss this crazy rally of Bitcoin!" shows excitement and joy. There's also aspect sentiment analysis. This type of analysis focuses on interpreting the sentiment about specific subjects within a sentence rather than a sentence as a whole. For instance, in Elon Musk's tweet, "Dogecoin is the people's crypto," aspect analysis will determine the sentiment related to Dogecoin instead of the complete sentence. Cryptocurrency is still vulnerable to the irrationality of the market and lack of proper disclosure channels. When making use of sentiment analysis to crypto assets, we are likely to encounter a challenge related to the misconception about quite how sentiment is reflected in news and social networks. Any source of information can be quite informative, but also completely useless for sentiment analysis. The sentiment in reputable news sources should trend around neutral, while social media news results in behavior in the exact opposite way. Social media threads tend to be noisy and relatively subjective, which can produce misleading sentiment analysis results. That's why you really need to be careful with choosing the source of information that you are analyzing. Market sentiment is a great indicator that shows where the market stands currently and the direction it is likely to move in. It can also help you to determine when to sell or buy, or maybe go against the market if it fits your trading strategy. That's it for today's video. I'll see you in the next lesson where you will learn even more about the world of cryptocurrencies and trading. My name was Shad and this was EXMO Cryptocurrency Exchange. Bye for now.